Hey, what's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our swing report. In this video, we will go over the overall market, cover some hype sectors, hit you with some trade zones, update you on some prior trades and ideas, and that is it. So let us get into it. Okay, so starting off with SPY here. If you recall, last week we were saying, okay, well, we left off here on Friday. And the idea was, okay, well, if the sellers were to step in this week and begin some kind of daily retracement, then we would just be looking for a daily higher low over this guy. And the buyers would be most confident if they could hold over the breakout level, which was 550.28. That continues to be the case. Obviously, there was little to no retracement last week. We did have this little break from Thursday's selling on the back of CPI, but sellers did not advance at all. That being said, the higher high on Friday, not seeing much follow through at all, is also a bit of a red flag. When you see, when you have a little bit of balance and then you get a higher high that lacks follow through, typically what happens is, you get a look above and fail. Typically what happens is you should expect more balance. So that's what happened here, for example. Here, right, this was a higher high that lacked follow through over this high, and then we saw a little bit more balance. Here was a little bit of 2 days of sideways, higher high, no follow through, bit of balance. Over here, this is a higher high too. If, let's see. Yes, little higher high here, no follow through, more balance. Higher high, no follow through, more balance. Higher high, no follow through, more balance. That's just kind of how it has to go, right? Because what is the higher high? The higher high is the market trying to move higher. And if it can't move higher in that moment, then okay, well, what does that suggest? The buyers are weak at that moment. Does it mean that the sellers are strong? No, right? There's a difference between these, right? You can't even say the sellers are on the advance right now until they can clear this area of demand. Once these sellers can get under a prior area of demand that was established on the way up, then we can say they're on offense. But as of right now, this is just a failure for buyers to advance well, but they are still in fine standing as long as they're holding over this demand zone. Okay, so that's honestly it, right? So yeah, on next week, what we're looking out for would be just holding over. Can they hold over 550.28? As long as they can hold over 550.28, that'd be the best case scenario for these buyers. But even if they're holding over the value area high, that would be fine, 547.29. And even holding over the POC, it would mean that they're on defense, right? Again, this is pretty much the last line of defense. As soon as sellers start finding acceptance under the point of control, that's like the early signs that they're going to try to go on offense. So for example, you can see over here, with this breakout over here, what happened, right? They got stalled at the point of control. So the buyers were defending that last line of defense relative to this structure that they had. If they were to start finding acceptance under the point of control, like over here, for example, right? They fall under it and then back test it. Okay, that's the sellers trying to go on the advance. They didn't do so well here, but that was their attempt. Okay, so for example, then over here, which it's been removed now, but this demand zone, when they broke back under it, back tested the point of control, which is probably here because you can see all the volume over here. I'll just mark it up. Actually, it wasn't. But once they start falling under here, you can see defense, defense, and then I bet you intraday that there was like a lower high or something made off of that. I would not be surprised at all. Right? So clearly a little battle for it here, and then a little lower high made roughly off of that point of control. So anyway, that's pretty much it. That's what we're looking at. For the SPY, lots of space for a daily higher low to be set over 542.52, and even the weekly trend now is like very secure because the weekly higher low is at 518.36. You'd have to really notably retrace to get even close to 518.36, so the odds of a weekly higher low being set are pretty good. And these sellers, they don't change anything on the weekly time frame without getting back under 533.07. They won't negate the change of this breakout. And then on the monthly time frame, there's also a good amount of space for a higher low over 493.86. So there's really not much fear in the market right now, despite that 1 day of selling. I'm always checking out the money market fund. There's still trillions of dollars in money market funds, which, like, what's going to happen once rates start to come down, right? Like, their money market funds are not going to look as appealing, right? They probably aren't looking at appealing right now anyway. Like if your money is stuck in a money market fund for whatever reason, right now, and you just watch the market rally like 20 or 30% or whatever, you probably don't feel so good about that, right? So this capital that's just sitting in these money market funds, that's just waiting to be deployed, not necessarily all of it, but it's a significant amount of capital just sitting in the sidelines. And then you look at the fear and greed index, and it's only like barely flirting with greed. So, yeah, that's pretty much it. All right, so let's go cover QQQ. Qs are similar but a little bit different. So the selling on Thursday was a little bit more significant in QQQ, but same idea, right? You're still holding over this breakout point, 487.20. As long as you're holding over 487.20, then this change is not yet negated. Lots of space for a potential higher low to be set over 476.26. Anything over that is going to be good for another daily higher low. Again, weekly time frame, space for a higher low, right, over 473.82. Monthly time frame, space for a higher low over 413.07. So, oh, I'm sorry, I didn't hit you guys with like a bit of a trade zone. So where would we want trade, right? Hourly oversold conditions into this area, that's where we want it, right? So if you're looking for a daily higher low play, then something like this would make a lot of sense. Playing off of these key levels, accounting for a potential gap fill that doesn't see a complete fill, and then really just playing to get back to these local highs. So if you see more daily retracement, get these hourly extended, this is a very notable trade zone, very reasonable trade zone. So for the Qs, it's going to be pretty similar, right? You want these hourly oversold conditions and coming into these key levels, right? So something like this, I would say pretty reasonable as well. And again, for a play like this, you're really just trying to get back to the local highs. I guess we could include all of this volume block and just trying to get back up here to this key little bit of hourly supply that's now sitting at the all-time high. All right. So that's pretty much it for the Qs. Oh, that's where there's two lines here that's bothering me. Hang on a second. Oh, wow. Lucky draw. Okay, moving on to the Dow. So it doesn't really look like this conservative trade zone is going to hit. And at this point now, this is enough on the weekly time frame, enough of a move on the weekly time frame that we could expect a weekly higher low. Ideally, we'll press a little bit higher here. I don't really love playing for higher lows after you see a higher high lacking follow through. Doesn't mean it can't work. It worked right here. But, for me, when you see a higher high lacking follow through, the other side should try to test the lows of it. So I prefer to look, closer to the lows, which is actually what happened, right? Like basically what held here was just this demand zone. So yeah, that's really it. I think it's pretty reasonable to be looking for plays in the Dow like this now, right? Something like this I think would make sense. Playing for a potential weekly higher low, coming into where the majority of this volume was traded. This daily no change level is not correct. Should be here. These buyers are fine as long as they're holding over 395.59. And this breakout would not be negated. I guess technically we could be here, but it's not going to matter that much. Okay, so that is really it. Honestly, I don't really trade the Dow as much. I prefer SPY and QQQ. But still, if you're a Dow trader, then I really like it like this. All right. And that's really it. Should be here. I'm going to stick with this one just because, like, it's made right off of this point of control. So I just feel like the high of this range was pretty much being determined by this POC. It's, it's not a big deal. The way that because we get this question a lot in our community, right? Like, what's the right level? There's no right level, right? They're just references. They're all just references, right? And if you're looking at your sequencing system, right, with objectivity, right, you have a standardized system, then usually what's going to happen is like there will be discrepancies or whatever. There will be times when you're like not quite sure which one to what to consider more of. I just look at them all as like a group of friends who are telling you the same story. They're gonna have slightly different takes on it, but as long as they're for the most part agreeing, then that's really more than enough information for us to operate with. So for example, an NQ, this is the example that was brought up the other day. In NQ here, we had a gentleman in our group ask, all right, well, here's this hourly structure here, and this low was made pretty much right off of the point of control. But from a session to session perspective, it looked like this over here. It was over here. It was, so this low is the same as this low. Okay, this low right here at 20615.75 is the same as this low, 615.75. Okay, and so the question was, all right, well, he was trying to play off of this session to session point of control, which is two session POCs, and he was saying, but he got stopped out, right? And then he saw that on the hourly time frame. Okay, well, this one nailed it. So how do you know that that is the right one? You don't know that that's the right one. You just know that they're both there. They're both telling you accurate information, right? One is from a session perspective. One is from an hourly chart with extended trading hours on perspective. And they essentially affirm, essentially you should view them as potentially affirming each other, right? Because the session to session chart, right, the level is slightly above it. You know that if the sellers can't get through here, right, then they're not going to get through here because this is lower. So holding the session point of control would affirm this structure's POC as well. So it's not about choosing one or the other. It's about looking at them, understanding what they're telling you, understanding the relationship between them, and then using them both, right? If you had two friends and they gave you slightly different takes, right, you wouldn't just look at one friend and be like, you're an idiot, you know, you're completely wrong, you know, get the hell out of here, we're not friends anymore, I'm not listening to you. No, right? You would, you know, kind of split the difference here, right? and understand what's going on here. So anyway, that's the way that I look at it. Yeah, it's a good question. All right, so moving on to IWM here. So for IWM, if you are still, you know, in a runner from here, or if you were, you know, using the tactics that we described to, you know, day trade a position in RTY to roll those proceeds or whatnot, if you were doing that with me in RTY, then, you know, we are sitting pretty, right? This is shaking out pretty much perfectly, right? If you'll recall, the trade zone that was shared down here was this guy. So this new one, obviously we didn't hit, but we pretty much nailed this guy for you. And so at this point now, if you initiated here, you took the chop, your stop loss can be here. But, you know, remember what we're looking out for, right? Right now, we're still continuing to monitor this guy. This guy is really the key, right? This one made all these lows over here, made for a bunch of highs throughout all of this price action. Oops. Was clearly a problem over here for buyers for a while. And now this is the most acceptance, this is the most space, I should say, that buyers have made over this key structure throughout all of this price action, technically since 2022. Yeah, since 2022. So lots of space for a daily higher low to be set. Anything over 200.53 is going to be good for one. And really what these buyers want to do, ideally, best case scenario, is hold over 211.88. That's the high of all of this range. If they can hold over 211.88, then again, they would be the most confident because this change then wouldn't have been negated. That being said, technically, as long as they're holding over this local daily structure, then this daily chart is fine. This daily trend is fine. So that is pretty much it. I'm monitoring this guy now, right? You can use this whole structure. It's fine if you like. But I'm looking at this little guy at the end of it as because, well, this made for this really great high over here. And then I think it was also affirmed over here. So, you know, I'm thinking the market has already told us that the value area low, this structure is quite important. So I'm just going to be using this as a reference. So the next key level from an upside reference is 217.38. Okay. You know, weekly time frame also has a good amount of space now for a higher low. Anything over 197.41 would be good for. All right. Moving on to the dollar here. So the dollar, after rejecting from this bit of supply over here, continuing to drill lower. So now it's really just about what's going to happen here, what's going to happen here, what's going to happen here. So right now, the dollar, they should be trying to come all the way back down here, which is what happened ever since they fell out of here, which is what happened ever since they fell out of here. So basically, if not acceptance over here, then test here. If not acceptance under here, then test here. So that's what we should be looking out for. And just like with IWM, we were looking out for the same thing, right? If not here, then here. If not here, then here. Blah blah blah. But if they start getting caught up in the middle, right, that would be notable. And remember, there's a, you know, that's pretty much the POC of this guy. Right, so it's pretty much a battle for that point of control. So for the dollar, you know, we're looking at something quite similar, wherein the sellers now should be trying to respond in kind after testing the key supply. The sellers should be trying to come down to this key demand zone, but on the way down are these local areas of demand, right? And so we don't really have that same keystone reference over here like we do in IWM. So here we'll just have to use these daily demand zones that were built on the way up. So the next key test then is going to be 103.315 if they can make a new low here. If they can trade through this guy, well then obviously we should just expect more balance in this big old range, which would be fine, right? Like if the market is consolidating right now, or rather like you want the dollar to continue to stay like, you know, kind of weak, right? If you're an asset buyer, obviously not incredibly weak such that, you know, such that our goods are like so cheap to export. Not that we make that many goods, but anyway, that's pretty much it. Okay, and then moving on to the VIX here. So for the VIX, really same deal, right? Where it's still really low. So you know, a spike in the VIX can come at any time, but really the clues come from when the VIX moves together with the market. The more the VIX moves higher with the market, then you know, well, what is that, right? People are hedging their bets, right? They're thinking, okay, it's been a low vol environment for a long time. And, you know, when there's a low vol environment for long enough, then vol returns, right? So that's really it for the VIX. There's no real sign of that. There was some signs of that going into CPI, but, you know, that's pretty much done with now. At least that went back to more or less normal on Friday. Okay. All right, so moving on to NVDA here. NVDA still looking pretty durable. Like you can't love this big old drop here, but technically you're just looking for a higher low over, excuse me, over 118.83. Anything over that's going to be good for a daily higher low. And this daily demand zone remains the key, right? As long as they don't trade through this guy, then buyers are constructive relative to this, well, demand zone. And so that is really it. 125.59 is the high of the range. The key levels after that are going to be 122.23 and 119.82. The weekly time frame also, you know, it's okay still. You just set a weekly higher low, but if that's going to be a lower high, then this is going to start looking not as great, potentially looking at monthly consolidation. Okay, me personally, I'm just gonna wait for like some meaningful monthly consolidation, I would say, before looking for another play. But if you're like a short-term operator, you know, a shorter-term operator, I should say, so we got one here, I think. I still think that's reasonable. Let's see, you probably have hourly OS into it. You have hourly oversold way before it. So let's look at half day because the hourly was just there. Yeah, I like it like this. And again, this is really more for like shorter term traders, like 0 to 5 day or 0 to 2 week kind of setups or whatever. But if you're looking for like a much larger value play, right, something you can hold longer, I would just wait for monthly consolidation. So that is pretty much it for NVDA. All right. Okay, Bitcoin, this is really interesting, right? So a few notable points. First things first, you know, we have to always start from here. This is the 2021 structure sitting at the all-time highs or the prior all-time high. And all of this consolidation was healthy relative to that 2021 structure, as long as it was holding over the point of control. So now this is a decent amount of acceptance. This is the most amount of acceptance under that point of control at 61003.36 throughout any of this consolidation. So that is notable. But at the same time, you know, okay, we'll call it exactly for what it is. This was a notable failure on the seller's part to negate the change of this breakout, okay? This was a notable failure on the buyer's part to find acceptance back within that key supply, this value area. This is a notable defense, right? And failure on seller's part and a defense on the buyer's part to hold over this guy. This guy over here, this little bit of balance that was made on the way up of this more or less one-way trade, which made for this major low here, continuing to be a very key reference, right? So so far, holding over it is a good look, and this is essentially buyers playing defense, but they have to get back over here to start saying they're back on the offense relative to this structure, okay? So this is really only like a shorter term situation, in my opinion, for me. Like if you are a very active trader, let's say 5-minute oversold plays into this guy, I think that makes a lot of sense. And I wouldn't be surprised if there were already a bunch of plays right? So 5-minute oversold, as soon as you see 5-minute oversold, you're playing off of the key level, right? 5-minute oversold off the value area low, okay, that's a goodie. 5-minute oversold off of the point of control, that's a goodie. You almost kissed it here, that's a goodie. 5-minute oversold off of this guy, that's a goodie. Right, goodie. I mean, these are just bounce plays that you'll stop out, but the idea is they are good bounce plays. So that's what I'd be looking out for Bitcoin. That's really it. I think we had like a bigger picture setup, right? I don't recall now. No, we ran this trade, chop and stop, and then I was going to shift over to Ethereum. And for Ethereum, unfortunately, I just missed this play, right? It was July 4th or something. I remember I was out with the fan. So, you know, bummer, but it's all good. I was hoping to see like a lower low here, get everything extended again, and then I would be interested in a play. So if this goes without me, it goes without me, that's fine. But hopefully a bunch of you guys capture this trade when it was shared, you know, on this day or whatever. So if you did initiate this trade, I sent out a tweet letting you guys know, hey, listen, on this day, I would consider taking profits because, you know, while we're looking for a retest of this area, which is just this guy over here, excuse me, while that is the target for this trade idea, there's a potential failure point right here, which is the daily no change level, right? So I always like to take partials out where I like to front load my risk and then take partials out whenever there is the potential for a failure. So that was a temporary top. Whether or not it's a major top, we don't know. It's definitely notable that they began daily retracement here with really no follow through at all. And this structure that's being defended right now is this guy, which pretty much made this low and this low over here. As long as you're holding over this guy, then we should expect price action like this. So that's really it. Weekly time frame has a good amount of space for a higher low, trying to hold this double bottom here. I don't really, for a lower high, excuse me. I don't really consider this a lower high, so I'm just going to say anything under 3973.90 is going to be good for a weekly lower high. And that is it. Okay, moving on to GME. So GME is still just not really doing much of anything. Sorry, my voice somehow triggered. The GME is not really doing much of anything over here, and so, or AI is taking over now. I don't know because I didn't say the command. Anyway, GME super tight. Is volatility is, you know, bound to come sooner rather than later. And honestly, it's quite notable that they continue to hold over this structure. Remember what we're looking at right now. The gap is what's trying to be digested right now. They're trying to the markets, I should say, are trying to decide, should this gap up continue to be affirmed? We have this gap up, right? And that was the tweet or whatever. And then when we come back in, right, the gap is negated. You balance within the gap for some time, clearly a battle to see whether or not this gap is going to be meaningful, or rather maintain the change from the gap will be maintained. Then you pop out of it, right? Good amount of follow through, get caught up at this point of control, this big structure's POC again, which has happened here and here, okay? And now we're right back to testing this bit of demand here to see, again, this represents the gap. If you're holding over this structure's key levels, which is the case throughout here and here and here, well then obviously this gap is being affirmed. So that's the case right now. They're finding acceptance back over to 4.77, which is a pretty good look. Maybe we don't get the setup down here that I would prefer. Like I would prefer to see another break under this area, the beginning of the gap, not see follow through, get price extended, and I would be more interested in a play. But, you know, it is what it is. You can't always get what you want. So that is pretty much it for GME. I'm not too interested in this unless we get some kind of extension. It's just not my setup. And you don't have to get every trade, right? Like just because you want to trade doesn't mean, you know, it's going to present you with the context and the setup that fits within your specific trade parameters, which are the only trades that you should take. If you're taking trades outside of your parameters, then you really have no way to control for what you are doing, right? You're not going to be able to adjust, right? You have to have the same system over and over again. Obviously, you can make adjustments as you go, you know, over time. But if you're just, you know, jumping from, it's like jumping from one line to the other when you're like at the supermarket queue or whatever, right? A lot of the time, what happens, right? The line that you just left, you know, starts to move forward. You know, it's kind of like that. So anyway, you want to stick with something, right? Like stick with something, be consistent with it, and you know, once you are familiar with whatever you're doing after you have a lot of consistency is then when you can start applying some like deviation, some nuance or whatever, even or maybe a whole new play. So that is pretty much it for GME. I guess no, that's really it. You know what we should look into more is like doing butterflies on GME, because that would bring our cost for each trade much lower. And I don't mean it as a range play. I prefer using butterflies as like a targeting play, which is not really what they're designed for. Excuse me. All right, so that's pretty much it for GME. CCJ. So CCJ looks honestly fine. It's one of those assets that it's really choppy. It'll chop around, drill, make lower lows, not really see follow through, and then chop around, drill. So I personally am still sticking with this, right? Like look at what happened here, right? You make an area of supply, breakdown, almost clear this demand zone, higher high, higher low, higher high, clear all of this demand over here, and then higher high right through it. So yeah, I'm sticking with this, right? This is an asset where, I definitely want to have that extension. Otherwise, I'm not really interested in any play at all. And that's kind of my MO anyway. So I'm still looking for it down here, but that being said, and you do have earnings, so earnings can, certainly send prices lower. But anyway, space for a daily higher low, anything over 48.26 will be good for one. And really what we care about is this structure over here. This guy sitting at the all-time high. It's very similar to Bitcoin, right? So as long as the buyers are holding over that structure with its point of control at 50.22, well, then this structure is being affirmed as demand. So the buyers are looking pretty good here. I ended up closing out the rest of the 48 puts on this day because they're pretty much max value. If you don't know what I'm talking about, it was shared in either one of these videos, or actually it might have been in the community. That was actually in the community, in our Slack community. And if you're interested, trading alongside 1,000 or so traders, check it out. A very supportive group, bunch of friendly folks. I really doubt that you would be disappointed. I doubt it. It's a great place. So anyway, come check it out if you like. It's the only way to get access to Dano these days, for the most part. Anyway, so that is pretty much it for CCJ as well. I'm not too interested in doing anything in this. Weekly higher low has been set at 48.26. I'm not really so interested in doing anything. Well, I won't be doing anything in the next week because I won't be here. So I won't see you guys next week. Just a heads up, just a little trip to the Galapagos Islands. So moving on to Tan here. So Tan hit you with this trade zone, I think a couple weeks ago, and hit you with a tweet as well to let you guys know when we were backtesting this high volume area that I would consider taking some partial profits off here, especially because, pretty much nailed that trade zone. So even here is a 10% gain. And we were starting to get into this really choppy area. So, I just personally, I would have taken partials. If you didn't, you risked it for the biscuit, which I know at least one fella did. Then great, that's no problem. But I really wouldn't hold it for any later than an exit at the value area high of this structure, because remember, this play is based off of the point of control of this structure holding. And so if the POC of this structure is holding, we should expect a test of the value area high of the structure, whether or not, like over here and over here and over here and over here, hold the POC, go to the value area high, right? So hold the POC, go to the value area high. Hold the POC, go to the value area high. So that's the goal. That's where these buyers should be trying to get to. And there's decent chance that they will have some problems there. So no later than 45.34, if you took this trade zone, is where I would suggest booking some partial profits. Now at this point, there's a lot of space for a daily higher low. Anything over 38.68 is going to be good for one. And that is really it. There's space for a weekly lower high, and we're just dealing with this kind of like falling wedge like structure, which is why we were looking for the trade zone was giving us a lot of wiggle room for a potential lower low. That was the reasoning for this. And you can just go back, I don't know, like 2 weeks or whatever. I don't know, 2 week or 1 week, 2 weeks to hear the original trade setup logic. If you're new here, if you are, welcome. So that is really it. I'm still watching this key supply, right? This key supply has been problematic here and here and here and here. And so I would imagine that, after this 45.20, next objective should be 47.18. All right. And then finally for MSOs. So MSOs, let's see, we had a new trade zone that didn't come into, but it looks like it's bouncing off of our old trade zone. So this one already came into the top of the trade zone, hit the target. Another lower low, not seeing follow through, is pretty reasonable. I mean, it's a pretty notable failure on these sellers' part. but you still have to find acceptance over 7.50 in order to negate the change of this breakdown here. So that's really it. I still really don't like this setup for MSOs personally. I think if you are going to be trading MSOs, you probably want to be looking at one of the stronger names. I forget which one we established last time. Was it GTBIF? I think it was GTBIF. I guess that looks better. It does look better. GCNNF also is better. I mean, most of them look better because MSOs is flirting with a black dirt breakdown, you know? So it's probably a situation where you want to pick which MSOs, you know, especially if you're trading it. I think it'd be easier. I still think this is reasonable. This, not that one. I mean, that one is reasonable if you can get extension. I think there was extension there, actually, right? Let's check it out. We probably had hourly oversold again in here. Yeah, you do, right? So again, extension into location, extension into location. That's the play. So anyway, that's pretty much it for MSOs. I would still think, you know, daily oversold conditions into this base would be better. So this one. If you've not done that one, or you did that one and you're out and you're looking for more, I would just be patient and see if we can get it down here. Okay, so that is pretty much it. I appreciate you guys tuning in. Thank you for sharing some of your time and energy with me. If you made it this far, if you wouldn't mind helping us out with a like and subscribe for, you know, a little bit of sacrifice to the algo guides. It costs you nothing, completely free, and helps us out a lot, and we would appreciate it. Otherwise, that is it for me, and I will see you guys in 2 weeks. Farewell.